To take us through how nabtrade investors are playing this current market is Gemma Dale. She joins us now live via Skype. Gemma, great to have you on a Friday as always. Look, it's been an interesting week, hasn't it? That big dip that we saw on Monday, and then we had a bit of a bounce back. Did investors sit tight? Did they hold on to their holdings, or did you see some selling on Monday?
Oh no, our guys have learned to buy the dip. That's the one thing we learned in 2020. I've been hypothesizing for a long time that retail investors are perhaps not as stupid as some of the professionals might indicate. There was always this principle that retail investors panic when prices fall and they sell at the worst possible time, and then they take too long to get back into the market and they miss the upside. And we saw the exact opposite last year. They bought the dip like nobody's business. We had an 80% buy last year between sort of Feb, March, when the market started falling, to the end of June. So of all trade volumes, 80% were buys, only 20% were sells. Everyone was waiting for an opportunity on Monday. So we saw enormous volumes, all buys on Monday. That was very exciting for everyone. We've seen our cash book rising for quite a while. A lot of our investors, there's been a real shift in behavior from last year to this year. Last year was obviously abnormal, and many investors were incredibly opportunistic and picking up lots of stocks that they wouldn't typically buy because they were so weak. So they're buying heaps of travel stocks, for example, which we don't see in a lot of portfolios. And this year, particularly the last few months, we've seen this real trend back to quality, back to blue chips, back to sort of core portfolio stocks that we would have seen 2 or 3 years ago. And we're seeing it again now. And they took Monday as an opportunity to pick up more of that stuff. They were kind of excited. And then they go to the sidelines again when the market normalizes. So the rest of the week's been pretty standard.
And Gemma, talking of blue chips, of course, the Woolworths Endeavour demerger was the big news from this week. How did we see investors play it?
I'm really fascinated by this one. It's not necessarily the kind of news that would motivate our investors a great deal ordinarily. But as I said, this flight back to quality and to big retail brands and very familiar companies with strong revenue streams and so on has seen Woolworths and Coles sort of come back in to a core portfolio and be far more popular. They obviously got a big bounce last year at the beginning of COVID, but otherwise have been quite quiet. We saw absolutely enormous buying yesterday, enormous. Though number 1 and number 3 in the trades yesterday, Woolworths and then Endeavour at number 3. So there will be many retail punters who have Woolworths on their watch list, and then when they see it come off 15%, if they get an alert, for example, go, oh my God, that's amazing, I'll buy it. But they obviously understood what was driving that fall because we saw the buying in Endeavour as well. So if we'd only seen buying in Woolworths, you'd be a little bit concerned that people didn't understand what was driving the share price movement. But because they were buying both, we saw a 90% buy of both stocks. You wouldn't expect a lot of selling in Endeavour yesterday. So you hope that that's going to be mostly a buy if it's in the numbers at all. And it definitely was.
All right, well, let's have a look at the buy now, pay later space because it's always a popular one. Afterpay doing very well this week. Are people still buying it?
Yeah, it's really interesting. I mean, it was in our top 10 for 3 years. And in COVID, it was incredibly popular. Average buy price last year of $40-ish. So most of our investors have done incredibly well out of Afterpay, even when it was down at $85 a few weeks ago. So back at 130, to be honest, it's confusing people because it's moving so much. They saw it up to 160. When it started falling and then bounced back to 120, we saw a lot of selling around the 120 mark, and we are seeing selling now at 130. So a lot of people are going, I need to lock in some of these gains. I may not see 130 again because it did get down to 85, but it didn't stay there for very long. So a lot of our investors, the trading is quite mixed. There are some people picking it up on, perceived weakness. Zip, however, it's been on a run and it is far more convincing as a sell, but yesterday it was a buy. So the volatility of these stocks leads people to behave in different ways. They're never quite sure where to pin them. But because we have a lot of holdings of them, they're very widely held. They were both in the top 10 last year. You can see investors trimming when they get the opportunity, picking up more when they get the opportunity, and some people are selling down entirely.
And Gemma, talking of volatility, CSL has been one of the ones that has seen a bit of movement this week. What are traders doing? Is it a stock that they tend to hold, or are they going in and out of their positions?
Yeah, CSL's really interesting to me. If you'd asked me 12 months ago, it was a stock that was only held by 10% of our book, which, given at that point it was Australia's largest company, was kind of astonishing. I mean, it's such an extraordinary growth story. Part of the reason for that was, it was on a multiple of 60 plus times, and a lot of people didn't feel like they'd had the opportunity to buy it cheaply, and they certainly weren't going to buy it when it was expensive. And they couldn't believe that it could continue to grow at the pace that it had for the last 20 or 30 years. So a lot of our investors just couldn't bring themselves to buy it at that price. It came off really heavily last year. It wasn't one of the big COVID stocks. People weren't super excited to buy it at $250. But when it was down at $250 again this year, after 316, 310-ish in December, people were like, I might not get another crack at this, and this is a high quality company I do want to hold. I'm still on 40 plus times. It's not like it's super cheap, but it's as cheap as CSL is going to get based on our investors' experience. So there's been a lot of buying through the depths this year. As it was up over $300, we saw selling. Under $300, we see buying. So that seems to be a threshold at the moment for people. That $300 mark, it's at 286, or when I was looking earlier today, we'll see strong buying at that point. But a lot of our investors are starting to see so much volatility in it. The investors are going to the sidelines, and we see some sort of larger traders moving in and out.
And Gemma, given the backdrop that we are seeing at the moment when it comes to New South Wales and the border closures between states, what are the travel stocks doing?
Yeah, this is such an interesting one. I mean, obviously they were incredibly popular last year. They were sold off so hard at the beginning of COVID. People understood immediately what the impact was going to be. So we saw very aggressive buying last year when they were sold off incredibly hard. People were like, this is quite opportunistic. However, they're not as excited anymore. They feel like they've run back so hard. So I'm seeing on screen, because I sent you a note about it, saying that Qantas was a 97% buy, but the volumes are tiny, so it's off a few percent. People can see the impact of border closures on the price. They know it's going to come back because they assume that this is going to be another speed bump on the COVID path that we're on. And that Qantas will come back and it will be Australia's leading airline and all those sorts of things. The price will bounce. But there's only a few people who are taking the opportunity to pick up travel stocks in this environment. Most people had their bite at that cherry last year, did incredibly well out of it. Most of them have gone to the sidelines. They feel like they did well. It's an opportunistic trade. It's not one they need to do every time there's a border closure or COVID raises its head again.
And Gemma, it always seems to be like we're talking about meme stocks every other day at the moment. What are you seeing on the international level? Are GameStop and AMC still one of the favourites?
They're still in there. They're very small, really small trade sizes, small number of people, but they're still in there. It's kind of amazing how long this story's run for, really. I mean, it was January. It was all very exciting. Hedge funds going under, the little guy against the big guy on Wall Street. Very exciting. We're talking nearly 6 months later now, this stuff is still running and there is still motivation for people to be part of it. It's obviously sufficiently volatile for people to make money. As I said, very small trade sizes though, under $5,000. So they're meaningful profits if you're a small, newish trader. Tesla's back in there, which is interesting, and it's right at the top of the numbers. It's bounced 10% this week. So for a lot of people who've been holding it for a while, that's a nice thing to see. It was down like 40% over 12 months. Not over 12 months. It was down 40% for a little while there, but a lot of investors have done incredibly well out of it because a lot of our investors were buying it at the beginning of last year, but we have seen buying all the way through that 12-month period where it's been up and down. What's even more surprising, though, is Apple, Microsoft, your really big names, they're actually getting trimmed at the moment. So people are selling down your real blue chips. They can see markets at record highs at the moment, and they're just taking the opportunity to lock in some profits, I think, on some of those, particularly before 30 June, because they've done very well. The other one is Palantir. So that's quite an interesting story. It was very flat when it listed for a while there. It's up 160% since it listed, year on year, technically, but since it listed, and quite a few people have taken profits on that as well.
Yeah, it's interesting, isn't it, that backdrop that we're getting when it comes to those tech stocks, seeing them on record highs. And it is interesting that they are taking profits now. I guess, as you said, the end of financial year has something to do with that. Gemma, always great to check in with you on a Friday. Thanks so much for joining us from nabtrade.
Thank you.